Yeah, look, who fucking with me? Tell me one name. Then ask him if he came from dope spots and gunplay. Finally off the runway. Damn, it feel good to spend 1,000 on my sunshades. Look, was street smart, so I'm done paid. Seen the brake lights, I had to swerve off the one way. I knew that I would make it one day. No, I gotta be a real nigga cause
obviously
I'm
you're gonna take losses, but
I got
the
a
point is to
beamer with a
mitigate
whole
those
lot of
losses
trunk
and make those
space.
losses
Many
small.
fuck face acting mad cause he unpaid. And I've been out here since a young age. I never been the type to complain. I'ma let my gun bang by any means to make my funds raise. I'm on this money marathon, nigga, so I run things. Check out the status that I've obtained. It's 10 racks and 4 tickets if you want me at your club, man. And in the scheme of things, that's chump change. When you doing 10 a month and saving up, where you done things. I crip hard and get love from the blood gangs. Blue chucks on the red carpet like fuck fame.
Yo, what's up? It's your boy Edward, back with another episode of Commas and Culture, and we got a really exciting episode for you guys today. We're gonna go over a simple and effective way on how to draw Fibonacci retracements. Now, Fibonacci is a great technical analysis tool to gain ratios in the market to see where the sweet spots are gonna be, where the market could potentially pull back, pivot to, and provide continuations. So it's really important if you are a technical-based trader to understand Fibonacci. You know, there's a million ways to make money in the markets, but Fibonacci is one of the best ways. There's a lot of videos on how to do Fibonacci, but I feel like a lot of them a little bit more complicated. This one's really simple and really effective. So tap in with me. I'm gonna show you guys how to get it. Let's do it. Yo, what's up, guys? We are back with another video. So I'm gonna go ahead real quick and show you guys Fibonacci made easy. We're gonna get right into it. No fluff, no BS. The first thing, I want you guys to make sure you got a pen, a paper, take some notes, because I'm giving you guys free game right here, right? I'm gonna make things real simple and easy for you. I'm gonna say that I'm not the greatest teacher, but you know, I'm gonna try to dumb it down and make shit as simple and easy for you as I can. But pretty much the first thing I want to talk about in regards to Fibonacci, as a disclaimer, this is just one confluence, right? This is just one type of confirmation. But what makes it so strong is that we're taking multiple or fib levels on multiple time frames to have multiple confirmations. So this is something you could take and put into your own strategy depending if you trade smart money concepts, ICT. I don't personally trade that, but I've seen a lot of traders take this exact same thing and implement it into their strategy, and really you could use it to trade anything. But bottom line, I want you to understand that this is just one confluence and you shouldn't just use this only to make your trades. But what makes it powerful is that we're using the Fibonacci on multiple time frames. So step number 2, or the second thing I want you to remember, is that you want to always start with top-down analysis. When I'm looking at the market and I'm using my Fibonacci tool, I base everything on the monthly time frame, the weekly time frame, the daily time frame, and then the 4-hour time frame. Depending on where market structure is, some time frames may be more dominant than others on certain days. Some days I'll take my entry based on a 4-hour fib level, a daily fib level, a weekly level. It just really depends where the market is and what the timing is. So pretty much how I'm drawing fib levels, right? I started off in a brand new month. I just kind of rewinded it a little bit to show you guys brand new month representation. This is October close, right? So the market came down and closed bearish. We broke our previous month low. So this would tell me, there is a possibility that the market could continue lower. So my first initial assumption or my bias would be that this is going to continue lower, right? So I'm going to draw a fib to the downside from high to low. Now, some people would draw it, you know, with multiple candles. One, we're looking at a monthly time frame. So measuring this whole monthly time frame is taking into consideration multiple candles. So you're able to find more solid areas of interest to capitalize on, right? So when I draw fibs, write this down. You're measuring one candle on a specific time frame, right? So monthly, I'm going to a new month. We want to be aware of the previous month. So I'm going to take a few key levels, right? It's even stronger when you pick levels that are aligned with structure. So you see, like, we have this low here, this kind of like structure here. I'm going to map out this 38.2 because this is kind of in line with these zones. My monthly levels, I typically like to make gray, and then I like to label them. So in this case, it's monthly. So I have M38.2, right? 78.6 we can see is in line with this structure here. We may not pull back all the way there, but it's important just to be aware of these levels. Another thing I want you to be aware of is that fibs are a double-edged sword. You know, the fib level could be right, but your direction could be wrong. And one thing I want to show you is that a 38.2 on a bearish fib can also be a 618. Watch this right here, 618 on a bullish fib. So the same level we just marked up is also a 618 to the upside. So meaning if we actually break and retest this level, this could actually be a rejection of a 618 and not a 38.2. Rewind this and listen to it again if you're confused, right? But I just want to show you guys, you know, most of the time when I'm drawing the fibs, I like to take into consideration both biases or both ideas, right? Excuse me. Been a long day. So we got a few monthly zones drawn out. So let's go to the weekly time frame. Weekly time frame is really important too. Now we're intraday trading, we're not swing trading, but price is going to come up to these fib levels that are weekly levels, monthly levels, and it's going to reject, and it's going to give us those moves for the day. I'm going to show you. So this week, October, this is the last week of October. You'll notice sometimes levels will kind of run into each other or overlap each other. In this scenario, I'm not really going to focus on marking this out, but I will mark out this 618. Sometimes what you can do is this label here. You could do M38.2 / W for weekly and then put 78.6, 88.6. That's up to you if you want to do that. So weekly 618. And then I like to change the color. The only thing I do gray is the monthly levels. Everything else I just keep this light blue, but colors, whatever you want to do, the colors don't really matter, right? And then daily, we could also see that daily is overlapping this as well, right? So actually, let me see something real quick. Where would, yeah. So this is the last day of the month. It was actually a Thursday. So this might not be the best example about to come up because we're having the first day on a Friday, but let's just see what happens, right? So going into the next day, let's fast forward a little bit and let's trade. I use this on NY session. You can do this for London session, but in my opinion, this works best on New York. So another thing also you want to be careful of and be cautious of is news. Always trade this after news, you know, because news is something that's going to be a catalyst to provoke the market, make it move into certain areas and react. You want to trade this after news, right? So boom, right here we filled 618. This is NY open. This is NY open right here, right? So we want to go to our 4-hour time frame. Typically I would go to my 4-hour and execute based on the 4-hour. We could draw another fib because we want to use a candle that's closed right before NY, right? So on this candle this is closed at 9 o'clock. New York Stock Exchange opens at 9:30. So you could see that once this candle closed, we went up here and ran buy side liquidity. Let's see what happens. If we were to enter at a 78.6, put our buy stops at 1.2953, or even at this 88.6, 1.2959. You want to get as close as you can to these major levels because this is a 4-hour fib. So I'd probably put my entry here at a buy stop after NY open. Let's see what happens. So boom, you see our entry would have been golden, right? In terms of take profits, usually my take profits are usually based on structure. Here we do see that we have structure to the left, so this zone would have been a good level to take profit at, or here or here. So this wasn't a huge move. Potentially you could have caught 40 pips, 30, 40 pips. It was a decent move. If you did get in at this 88.6, you could have caught 40 pips if you took it to the lows, to this structure here. If you want to be conservative and take it here, it would have been like 20 pips. So, using these fib levels, although the market looked like it was going to go up, we knew that we had this strong weekly zone here, and that eventually the market was going to turn back around. And all we did was just execute off this 4-hour. That's how we got the price of 1.2959. We got the discounted price, 88.6, 78.6, and boom. And then this push up is the next week, right? So also what's really important is there's 3 different types of ranges during the week. I don't want to get into this too much in the same video because this is not necessarily directly correlated or directly has to do with fibs, but I base my fibs around 3 ranges. That's Monday's range, the opening week range, the midweek range, which is Wednesday, and Friday, which is the closing range. So you see Friday we had this range close here, right? So we want to keep these fibs in mind. Usually I wouldn't keep these fib levels up, but I want to keep these levels in mind going into next week. Fortunately, we have an overlap with the weekly, so in this scenario it's not that important because it's overlapping with the weekly, right? So we don't even need to draw any other levels. What we do need to pay attention to is our higher time frame. So going into Monday, higher time frame levels, so going into Monday, let's see, New York session, what are we doing? So we did break a little bit above our 618. This would have been like a weekly 78.6. You'll see we tapped into this level again, and we got shorts again. If you just waited till after NY open, right? We just waited a little bit, right? NY open came up, grab liquidity, right where I told you our weekly zone is. Let's go back. You guys think I'm just talking out my ass. Let me just go back to the weekly zone. Let me just show you guys, because a lot of you niggas, I need to sit down and like grab your hand and show you type shit. So this is weekly 78.6, right under the zone. Let's go back. What do we do? Tap right after NY open. What happened? Tap the zone. Boom. It's kind of a shitty day that day, but you'll see the overall move for New York was sells, right? If you had a pending order here or even got in at the break of this low, you could have caught potentially 30 pips, 40 pips. If you got in here, you would have got what, 50 pips, 60 pips from this high. But realistically, you probably would have caught it here. If you enter like on a 15-minute time frame, break of the lows here, enter here, 1.2981. Again, you could have based the entry off the 4-hour as well. If you got in at the 4-hour, which would have been this candle, kind of a funky candle. I honestly don't like using 4-hour candles that don't have large bodies. That's another thing you want to be really careful for when you're using the 4-hour or lower time frame candles. I wouldn't do this lower than 4-hour, first of all, but when you're using the 4-hour, you want to be very careful when you're doing it on a small body like this, because it's just going to be whacked out. This would have been kind of awkward. If you did not know where the weekly levels were, this would have been really hard to capitalize on. But you'll see you had your 100 level here, 1.2982. You could have, after NY open, you could have got in at that zone. Oh shit, I'm looking over here. I'm kind of ahead of time right now. You could have got in here, you could have got in here, and then look right to our TP1, right to our fib extension right here. So another thing I want to go over real quick is fib extensions. Trying to make this video short. We're already 13 minutes in, but I did mention opening week ranges and whatnot. I'm gonna keep this short and sweet. So remember I said we're gonna focus on Monday's range, Wednesday's range, and Friday's range. We were just talking about Friday's range, trading Monday. Now that the Monday candle closed, this is our new range, right? This low and this high. In this scenario, the market did close higher. So we can draw a fib. I kind of screwed it up for you guys, but I'm just going to show you. You guys can still see that this shit works. But if you just draw a fib from this low of this daily candle, this low to this high, you'll see we have potentially more levels to draw upon. Got a daily 618 here, which remember, again, can also be a daily 38.2. But it's daily 618. Oh, shit. Daily 618. Oh my gosh, it's changing the intervals of the fib. Just gonna erase this. Daily 618. Why is it doing that? Anyways, daily 618 is right here, right? So going into Tuesday, and I want to show you guys one other thing. So these fib extensions are targets. Sometimes they can be entries, but most of the time they're targets, right? If you're going into a New York session and the market is still within this range, you want to enter in this range and target these fib extensions. However, if the market is already above this range and has broken either the 0 or the 100, you're going to try to enter on or fade off of these extension levels. So in this example, going into Tuesday, we have identified our Monday opening range. We've got our fibs drawn out. Going into New York session, we already see that we had a nice push off of this 618 going into pre-London, London, and going into NY. Going into NY, once NY opened, we pulled back down to this fib level, which is the 0. And also, we cleared these highs. If you look at structure, price came down, retested above these highs. So break a structure, break and retest right above these highs. Again, additional confluences and more bias to the upside. So you could have had an entry here, 1.2998. You also could have took the entry at this extension, because remember what I said, you could take the extensions for entries as well. If well, this is the next day. This is like Asian session. We would have been out by then because market close. Another thing, you want to be out by market close. I'm not holding trades, until 12 o'clock at night. This is an intraday setup. Sometimes you can use it for swing trades, but for the most part, it's an intraday setup. So right today, the intraday move, we had entries here, and you could have caught plenty of pips. There's plenty of pip to catch between this move and this move. This is 40 pips. And then you could have got in again at this extension, and it's another 40 pips to the high, right? And we have another extension here. Even if you just took it here, that's 20 pips. If you took it to the high, that's another 30 pips, right? And then Asian session came on. I'm sure there was probably some sort of news or some crazy shit that happened, because this is not a normal move. But this is Asian session. This is a whole new session now, right? So this is people probably taking profit. And look actually where we came back to. Our 618, our daily 618, right? So, and then we actually broke lows, or we respected these lows, right? So, that's pretty much what I wanted to show you guys. I don't want to overcomplicate this or make this too long. I could show you more examples. Obviously, looking at daily price action, this is not a trending market. This is a sideways market, and you guys just saw me or saw potential opportunities or possibilities where you could have made pip in a sideways market like this, right? I'm going to show you one more time. I'm going to show you on this shitty day one more time how we could have made it work with Fibonacci if we just, first of all, we rejected off the same monthly and weekly zone we've been talking about, right? Yeah, some shitty price action on this, but Wednesday, like I said, Monday we have our Monday range, and then midweek Wednesday. So Wednesday we have our bearish fib, boom boom. Where's our 78.6? Right here. And I mean, there were moves, but it's just really shitty price action, to be honest. Just really shitty price action. So if you would have taken the daily fib from Wednesday, our midweek range, you'll see it's overlapping with our weekly and our monthly. You see how price came up Thursday. This is New York open. We rejected off this level. Could have taken entries here and shorts all the way down through the rest of the week, right? Same thing. What happened Friday session? Friday session came out and we shorted off the 50. We shorted off the 618. Then we shorted off the 50 at New York open. And then we came down. So that's why it's important to know your higher time frame levels, daily, weekly, and monthly fibs. They give the overall direction. This was kind of a shitty example because look, this is a week of price. I wish I could have given you guys a better example, but I literally just rewinded to some random spot in the market. This wasn't the best example for you guys, but the idea is to show you guys how to draw the fib. If you guys want to learn more of the details, the ins and outs of parameters I use in terms of exceptions that can be made when drawing the fib, what to look for with bodies of candles, you can join my winner circle group, my paid VIP group. Link is down below. It's only $39.99 per month. I give you breakdowns on my full strategy. You have direct communication with me. You can ask me any questions you like, and I do daily signals. So I do pretty much everything for you guys for $39.99 a month, and you'll learn all the ins and outs. But here I just want to give you guys some free gems, something you could practice, grow up on. That's pretty much it, guys. I don't want to make this too long, so I'll see you guys later. Peace.